watching a master at work.
Shut up.
All right, so looking at SPX right now, we are currently pretty much on futures, just not only pushing up, we're currently like skyrocketing. This is pretty much bear market rally at its finest. As you can see from last night, we ripped from pretty much 3,600. Right now we're at 3,800. This is pretty much real bear market rally type of thing. So off the open, I'm really watching this 3766 level, which is 374.24 on SPX, and on SPY, and on SPX it's roughly 3754. So watching the market here on an SPX level, the reason I'll be leaning more on the call side is simply because the gaps. So as you see that there is a gap right here, 37 from 37.06 to 37.36, which off the open will be filled. This gap will be filled off the open, but it will create a new gap. But as you can see, we're currently in the creating new gaps phase, because we have a gap from here to here, and we have another gap from here to here, and off the open we will have a new gap. I'm guessing from here to wherever we open. I think we open here like this. So we're in the gapper stages. So usually when we get multiple days in a row with multiple gaps that are fairly larger, you get a more of an explosive move to the upside. So this particular gap was to the downside. That's why we had 3 crazy downside days. Keep every single one with a huge gap. We're literally doing the same thing, but right here. So we're currently not only making newer highs, but we're currently gapping in the market, which means that the momentum is leaning on the call side. So today off the open, you want to look at calls. You want to look at 3,800. They're juiced. I mean, these were like, let me check how much they were yesterday. The 3,800 was like $1. Yesterday it was 25 cents, and it's currently, it pushed all the way to $6. You're buying it on the more expensive side. Off the open, I'll pretty much be watching these gaps. 37, 36. I would like to see also kind of a bounce at that level. A bounce at 37, 36 would be pretty good, because it would solidify the trend. God damn, what is happening with Zoom? So we're currently pretty much pushing to the upside, and in all honesty, multiple gaps to the downside right now. Momentum is leaning to the upside. Ideal target, for this bear rally, wherever you want to call it, is 3806. We're still trading in this range. We're still trading in this god fucking awful range of 3806 to 3589. As you can see, we had one day where we broke out of the range, and then the same day we were able to kind of push back up. So this is not a gap. This is a gap right here. Gap here, gap here. Alpha open and reopen will become a gap. As of right now, there's no gap, because you don't know what is going to happen in the next 30 minutes. But once we fill this gap to the upside, which it's going to fill, but it's going to create a new one, because we're going to open up higher. So this today is because it's multiple gaps. I kind of I'm gonna scout the open with 3,800, but I'm only risking $500. So if I'm wrong, at minus 6, 7, 8%, I'm gonna close it, because I don't want to risk too much on the play. But these gaps I'll be watching just to see how they align throughout the market, because it's multiple gaps. Momentum is kind of pushing to the upside, and we're still trading in this range. If we look at it from a range perspective, let's remove all these to here. We had a day up here, but it's pretty much still in this range, and we're currently going to be opening around like right here. So it's going to create a new gap. So Off the open, I'll be watching for this 37.23 level. We could potentially come back down to it just to fill the gap. Or we could also come back down to where we closed off yesterday, which was 36.81, which would fill the gap today. I mean, in all honesty, if it was another stock where I'll tell you, oh, we're up 100 points, we're probably not gonna fill the gap to the downside, I'll tell you probably not. But because it's SPX and we've seen it down 100 and up 180 in the same day, filling the gap is a potential play to the downside. But I don't think it will happen. But there's always a possibility that it could happen. So I'm not gonna keep the possibility that it's not gonna happen. It'll probably, you never know with SPX. The day before that we gapped up and then we filled the gap. We filled the gap and then we gapped up. So this is a gap right here. This gap right here from 37.60, 35, 82 all the way to 36.30. And then today, from 36.80 all the way to 37.70. These are the two gaps. The same thing that's happening at Amazon, Tesla, Microsoft, Google is the same chart as SPX. It's literally the same. You see SPX and Amazon, same chart. And here are the levels. You look at Google, same chart, same exact chart. So once we break out of pretty much 38.06, that's where the market will start to rocket and push all these stocks with it. It doesn't really matter, if we have a bias, we think, the market's not bottomed yet. We have to play the chart, we have to play the levels, we have to play everything. Today, because the market has already pushed up too high, off the open, I will scalp the 3,800, but I will be using 30. You got all these stocks pretty much breaking out. That's like 229, 230, 233. We're currently on a breakout. I haven't seen Microsoft. Complete breakout on literally everything. All right, so this is the gap that we have here from 3,780 all the way to 3,640, and then we'll have a new gap 3,670 to 3,776, which would put futures at 3,776 minus 13. So it would put us at 3,763. So our open would be right here. So we'll probably have a new gap starting 3,763 all the way here. Damn, it's like a fucking huge ass gap. I will trade the first hour with you guys, then I have to go do a quick meeting with a lawyer, and then I'll be back after the meeting immediately. Just have a meeting at 10:30. Well, I'm just watching this 374.24. If it holds, I mean, I'd love for it to stay here for the next 20 minutes, but also 37.66 on ES, which is also right here. As you see, I'm risking 500 on every single play. So if I go buy 10 contracts, let's say this is $4 and it's $4, and I go buy 10 contracts and I put 4,000, I'm risking $500. So pretty much my stop loss will be tight. So 4,000, I'll be a minus 12% if I buy 10. Probably if it's 4,000, I'll buy 5. So the risk is 2,000, and then the stop loss is minus 30, minus 25. So just giving you a heads up. So whatever I'm going in, the more size I put in, the tighter the stop loss is. The lower size I put in, the wider the stop loss is going to be. Off the open, you can kind of keep a tighter stop loss, because if you're wrong on the first candle, you can just fucking exit. Keeping risk to reward pretty much 1-to-1, 500, 500. You expect whiplash market through the earnings. Oh man. Tesla has earnings first, right? When's Tesla earnings? Tomorrow? After tomorrow? Yeah, these gap ups are weird before earnings. What's the ER calendar? Let me just pull up the ER calendar. So today, October 18, Johnson & Johnson, MLI, LMT, Netflix. So today, Tuesday. So we had Johnson & Johnson, Goldman Sachs, Hasbro. After close, we have Netflix, Interactive Brokers. Tomorrow we have ASML, which would move the chips stocks. You have ASML, you have Lam Research. I hate these tickers, but they do move NVIDIA and AMD. Then you have AT&T the next day, American Airlines, Nokia, Blackstone Group, Dow, Snap, Boston Beer. Believe it or not, this Boston Beer company fucking rips. Sand beer rips. Then you have Verizon, American Express. Yeah, some pretty packed earnings. Tesla's Wednesday after close. I mean, with Tesla, what's the expected move on Tesla? Let's see. Tesla, this is actually perfect for our session today to explain this part. $18 move. Tesla has a large move. Off the open, I'll probably hold this 374.24, and then I think we can take this 3800. I mean, at $3, if we can get it, it's really good. All right, once again, good. All right, so we're currently under this 374.24. In all honesty, I don't like playing huge gap up days, but we'll see. If there's a setup, we take. If there's no setup, there's no setup. So we're opening right here, 37.51, 37.54. Usually when there's a huge gap up at open, do you expect the first candle to get faded? Actually, no. So yesterday we had a gap up, and I actually took calls up open. I had like literally an hour to trade yesterday, so I just traded the open real quick. I took calls off this level, 36.84, and I sold here 36.81. It was like 160% literally in 5 minutes, 5-10 minutes. So not necessarily the first candle will get faded, because if you look at what we said over here, the more gaps we have, the more the momentum will be leaning on the particular side. So in this particular case, when we were here, when there was a gap over here, and then the next day, huge move down, then another gap, and the next day, a huge move down, it's going to be leaning towards, the downside. If we have gaps, leaving gaps to the upside, we do eventually fill them later, but currently we're at the opposite side. So we have gap down here, we're going to open up to a new gap. So you could expect another kind of move to the upside. That's just how the market works when gaps come in play. So in this particular case, the move is to the upside, the momentum is to the upside. When it's double gaps, you don't look immediately for a gap fill. You look for a gap fill when it's one gap. So like, for example, on this particular day where fucking ripped 180 points, this is the days where you kind of look like a gap fill where it just happened. So a day like yesterday, for example, the first gap happens. Okay, is it going to fill the gap? You look at the momentum is pushing to the upside. As of right now, it doesn't look like it's going to fill the gap. So the momentum is going to just be to the upside. Now this second day, second gap. That's why on the first play, I'm telling you, I'm going to keep like a tighter stop loss, 12%, 15% stop loss if the gap is going to fill to the downside. That's why, off the open, the premium holds pretty well. If you're wrong, immediately off the open. You enter, for example, at 4, and then in one candle, it's at 2.7. Chances are you're in the wrong premium. So I'll just be watching pretty much. I want this candle to happen after 9:30 now, but I'm keeping a 20% stop loss. So if I take 5 or 7 or 8 or whatever I take, I don't want to lose more than 600, 700 max. If we enter off open, I'll be using this 3724. Yes, Randy. If it's off the view up in the first 5 minutes, definitely. Key level. If you want to keep a wider stop loss, could be 373.65. But me and you both know, if you use this level, as of this level, you're gonna hold minus 40%. All depends on how much you size. If you size too heavy, you can't. If you size light, sure. I'm gonna fill right at open just because that's a signal. So you can wait a little bit. Wait like 20 seconds.
2 hours later.
You see the bullshit they make you feel when you want to trim at $4 and it doesn't trim for fucking 5 minutes, only for it to go to $9? That's fucking market manipulation on emotions. As a trader, you must learn how to control it. I know it sucks to see red, but this is how, now in hindsight, when you look at it, it's 160%. Yeah, you're down, I don't know, 20%, 37.22, we hit the target. This is the target short where we were going to enter. Problem is, you can't hold to the target. That's the problem. Is holding to the target is hard when the contract is going 3, 4, 4, 3.5, 3.5, 2.6, 2.6, $3. It's hard to hold it. That's why you got to trim. Where we entered here, right here, 37.51, 37.22. Pretty fucking good play. Telling you, these small accounts is way harder than it looks like. It's one trade you saw. I don't want to look at the first trade we entered. We entered 5 at 5, then sold at 5.5, 6. And then we bought 10 at 4.4, sold 4.6, 4.6, 4.6. And then it went in literally 10 minutes, it went to half. Damn, off one candle, all off one candle. That's fucking crazy. So right now what we do is we wait for 37.22. All you can do is put an alert here, below to ring. For us, we take another entry. Why? If anyone can tell me today's class, we'll fucking find out why. But as you can see, we're still downtrending. We look downtrend, still downtrending. And on the 1 minute, now the downtrends, you know, if it breaks 37.29, it's the downtrend is going to finish. But this is where you flip the time frame. So you flip the time frame to kind of help you pinpoint pretty solid entry. So if we can have entry here, 37.38 would be more ideal. 37.32, less ideal, but still on the downtrend. The official trend does not break till 37.54, which if we're looking at the call side, 37.50 could be a good one to play. It's just, man, it's too expensive for this fucking portfolio. 3750. Man, they were 27 off the open. They're literally sitting here at $7. Want to take one? Let me take one. Now let's take one. Actually, I'm gonna wait a little bit. Is 37.50 just for a quick scalp? No. We're looking to play the bounce here, 37.22 to 37.51. If I had more, if I had a bigger account, would have probably taken 10. But in all honesty, man, just how the day started, I'd rather take one, you know, size down, just so we can hold from now from 7 to 14. Yes, this is gonna go to 20 probably. But if I buy 5, 10, I'm gonna trim. Here, hold it, it's pushing up. Now what we do, we just do this. Stop, 1, 7.32 for me. I'll put it at 7.4. If it hits, it hits. Just looking for the bounce back to 37.51. Ideally, yes, but as you can see, it's still downtrending. So if we get stopped out, we get stopped out. But you know, IBKR is really good. Sometimes, you know, the stop triggers and it doesn't sell us. And then when it goes up, it's way better as opposed to sometimes, you know, I'll take a $50 hit, no problem. Well, this would be the most ideal play, 36.80 for the gap fill. But only problem is this contract is very far out the money with, well, I mean, a couple hours left. It's gonna go 2.4 to 1.8, 1.5, then it'll kind of do its thing. So it's on my radar, I'm watching it. Now it's far, but if it fucking rips down and fills the gap, well, we have a large gap to fill. Like, even if you didn't enter any puts yet, like, there's room. Like, if we break here, it can go down far. That's why I'm gonna hold this one. There we go. There's the roll of 36.80, bro. How much was it? 2.4, 3.4 now? Oh my goodness. Also, this one, we just took it 23%, 25%. And I'm gonna wait for the 5-minute candle to close completely under 37.22 before taking this. I mean, we do have a fairly larger gap. Ideal target would be 36.81. I need this entire 5-minute candle to close under. And then the next candle under it, then I'll take it. Now it's too risky. No close. See, the candle's not closing. Just a trap. See, they're back to 2.4. They were just 3.3. How did you get this 3722 as a key level? Is that the tape? No, this is a key level from the charts. So I have a kind of a way to get the levels. To get them, in all honesty, you gotta be able to chart intraday a lot. You see, as I scroll through my things, you'll see I have a lot of let's go to the daily so you can see. You'll see I have a lot of levels that I chart. Even my completely clean has levels. And I have as you can see, a lot. You see I chart so many times. I do have like quite a larger amount than most people do. So it's from intraday charting. It's from understanding how price reacts to the particular level. So when I'm charting mainly on the daily chart. In today's class, one second, let me see what today's class is. Today's class is trends and the technical analysis. In Thursday class, we talk about how to get levels and we dial down, but it's really multi-time frame analysis. You go from the daily to the 4-hour to the hourly. Oh shit. what happened to my koi? It drops up 30%. You just keep going from time, multi-time frame, and then you kind of analyze how price reacts to the particular level. So I do it in another way, which I have to explain, takes me about roughly an hour to explain with the tape. But also another way you can kind of do it is you want to look at what the candle does once it touches, for example, 37.22 right now. So when we're looking at 37.22, as you see, every time we touch the candle, touch the level, it's a fairly large candle that comes up fairly large. Or same thing with 37.51 or 37.24. As soon as it rejects, so a large reaction to the level. So if you realize, like, you'll see a lot of levels in red, and then you'll see the golden levels. These are the key levels for me. These are where if it holds, it's going to push to the upside. If it rejects, it's going to come down pretty hard. And you're literally just dissecting the reaction. You see, every time it touches here, pushes back up. So now we're just literally sitting here and watching it. And then you can see the contract was just 2.4, now it's 2.8. I mean, that was perfect. You want to see how our candlesticks reacting to them. So, like, for example, it's 37.60. I have it as a level, but it's probably going to be golden levels. Oh my God, man, we missed the perfect fucking entry.
No, God, please, no, no, no.
What an entry we missed. Oof, 2.4 to 3.9. Wow, that's 100% play right there on that one candle. You see, you also want to look at how premiums react to the particular level. And when you're looking from a levels perspective, you have to look at you want to look at how premiums also react to this particular level. So the way you do this is simply by time in the market. So you clearly saw what happened to the 36.80 at 37.22. Once it broke, it went from 2.4 to 4. And then it had gone to 2.4, 3.3, 3.3, back down to 2.4, 2.4, $4 now. Keep in mind, I am still trading time value. I'm not trading anything of intrinsic value. So when you look at this particular contract, 36.80, and I am 36 points out of the money, okay? I have 5 hours left, and my expected move on SPX right now, based on implied volatility, is $31. So I'm in the expected range, but it could also push $30 to the upside. 68% probability to the upside or to the downside. And as I expect, as demand increases, as the volume increases, the expectations for this particular contract or for this particular range will change. So if now 10,000 contracts are open on this 36.80, the implied volatility will increase, and then the expected range will be higher, and then the contract will be more expensive. But when there's one candle that's going against you, that's when you'll immediately feel it in the contract. The contract will go from $4 to $2 like that. It doesn't look like it's a lot, but when you're in the position 5,000, boom, you're down 2,500, just like that. And this is what happened in the morning. It was literally down up 15%, then one candle minus 44. I wasn't even looking at the chart, I was looking at the tape. When I looked at the premium, I was like, what the fuck? I was going to only risk 500. Why am I down to 600? And it's part of the game. But as we get closer to the money, time value becomes more expensive because we're going to flip it into intrinsic value. But right now, looking at this contract, 36.80 at 4, you kind of feel that the time value for it is expensive. I have 5 hours for it to make a $36 move. And if I'm wrong, I'm going to lose everything. So, and then we missed the entry, and the time value just keeps getting more expensive. Now, on the other hand, this 3,700 we entered at 5.8 is currently 50%, so it balances. I'm gonna put a stop loss on this. Actually, I'm gonna hold it, man. If it gets intrinsic value, it gets intrinsic value. Wow, 36.80, bro. Fuck me, the FOMO is crazy. I'm not gonna do anything because the FOMO. So basically, with this smaller account, the goal of our thing is to learn how to scale in patience and waiting for the right setup. Yeah, as you can see, I mean, it went well past below us. I can't go and chase it. 3,700. Oh my goodness, 100% here. I'm telling you, even this contract, if you look at it, we entered at $3. no way in hell you're gonna hold to 14. It's too choppy. They went to 3, they went to 9, then they went back to 5. Actually, they went back to, we entered at 5, but they went back to 4.2. It's humanly pretty much impossible to sit there and hold it. 3,700 has intrinsic, man. Let's go. 3,680 about to have intrinsic. This is fucking wild. We got the whole move, man. There's nothing we can do right now that's not going to destroy the portfolio. So, and this is the reason why you go till the end, till you. I mean, we had this first play was 100%, 120%. Then we took another one contract. It was also 120%. We took it from 5 to 12. This one also 64%. 3750 was like 30%, but we took a on it, break even pretty much. I'm going to raise my stop loss to 10 on this, and then I gotta really go to my meeting. I'll be back. What I'm gonna do is if you guys can go to the Discord, BC, I'll be there. I'm literally just gonna do a quick Zoom meeting, then I'm gonna be there as quick as possible. Sounds good?
You are watching a master at work.